Hello, everybody. It's Sunday. That means Q&A day. Big thank you to everyone for coming. Thank you, TD, Tesla, K8, Sean D. You guys are amazing. Let's get into the story. It's a big one today. We're going to be talking about how a brilliant son wants to take care of his mom and how they can do that. And it's normally the elders that take care of the kids, but it's so good to see the kids taking care of the elders. We'll show you how we can do that, and we'll look at some assets, maybe some new ones that could be interesting as well. So let's jump in, and let's not burn any more time. I forgot to add the deck. Yeah, there we are. This is called Master Your Retirement. I will be talking about a lot of stuff as usual, and none of this is ever financial advice. And shout out to everybody on Patreon. Woohoo! Where all the questions come from. Let's jump into the first one. This is the first time Dan Talks has posted. Let's welcome them to our community. And Dan is the man I'm talking about, by the way. Very proud of you. And I love these questions. Hey, James, my mom just turned 65 and is considering retirement in 2 years. She's not wealthy, and she plans to mostly rely on $1,400 a month in Social Security payments for her $3,000 a month in living expenses, and she has saved up $300,000 in life savings, but she's unsure how to best manage this cash. How would you invest her life savings to help cover spending gaps and make her money last into retirement? Well, there's lots of stuff you could do, and it sounds like she leads a very humble existence, which is great, because the more you can stall how much you spend, the better off you are. But at the same time, she should be making some memories if she's about to retire in 2 years. So let's get into this. And I love these questions. And first of all, just to remind everybody, not financial advice. All assets can go to zero. But the good thing about this case is she has the $1,400 a month. She spends $3,000 a month. So half is actually covered by Social Security, which is great. Consider that a safety net. All right. So let's get into the story. What I would do, again, this is very risky, but it's also a very profound time in our lives. By the way, there's somebody buying something like, I don't know, 600 Bitcoin a day right now on Bitfinex. So we may have been through the worst of the dip. And again, it's volatile. But she could take maybe half of what I recommend or a quarter and play with it. But these are some models that I put together that I cooked up for her. And again, live cheap for the next 12 to 18 months, get to that retirement in 2 years. That'll give Tesla time to cook. And it should get us through the next Bitcoin bear market if there is one. And the plan is, as always, start selling sats and shares per month to cover expenses. All right. So let's walk through what you could do hypothetically, theoretically today. And again, prices aren't that good today. Ignore the amount, the dollar amount there, 151K, forget that. But what is important is what you could buy with $300,000 today is 1.37 Bitcoin. I'd rather wait for a dip to get that, to be honest. But anyway, we're just doing a hypothetical here. And 500 shares of Tesla. What does that mean into the future? Well, in the model we have, and we're hoping we can webify this real soon, I started her retirement year in 2026. So she can start pulling from this. If she makes the investments today, she can start living more than $3,000 a month if she wants. But this model just assumes she spends $3,000 a month of this. And then she has the $1,400 Social Security on top. So technically, she can spend $4,400 a month. Annual inflation for her $3,000 a month living expenses will go up every year and will go out to 2051, for example. And I assumed the portfolio will grow at 30% compound annual growth rate and annual living expenses, $36,000 a year. And she has the $1,400 to spend on, trips, Hawaii, whatever, over time. Let's have a look what this looks like. This is the asset appreciation for Bitcoin and Tesla into the future, just out to 2035. Because again, all assets could go to zero. We don't know if Bitcoin will be around in 2035. We don't know if Tesla will be around in 2035. But the point is the model does go out, and we'll talk about CAGRs at the end of this too. But Bitcoin, as you can see, the earlier you're in, the more you wait, the more value it has. And this is sandbagged, by the way. I want to stress that. This has Bitcoin going to just 348,000 by 2030. A lot of people, we believe we could be there this year. Okay. So again, very heavily sandbagged because it is your mom and we want to be extremely prudent. Tesla will go to 1,627. A lot of, by 2030, a lot of people are talking about $8,000, $10,000, $12,000 by that time frame. So again, very sandbagged. I don't get to $8,000 till the year 2035 on this model. Again, 30% CAGR. We'll get back to CAGR in a minute. But the beauty of this, assuming, again, heavily sandbagged, 30% CAGR, and I'm going to get my little picture up in the top left corner. This is kind of what you're looking at. Okay. So what this model does is it shows she starts to spend her living expenses early, a year early in 2026, because she's worked her whole life. Why not quit a year earlier? Maybe get a severance package, buy some more Bitcoin or Tesla with that. But she'd be spending $37,620 and have the $1,400 a month from her Social Security and the closing balance. So here in 2026, you got the opening balance. That's the assets you have with the appreciation. So again, 30%, things go up. 2027, because they start pulling from the fund, it goes down a little bit, but then things start going up again after that. Now, assuming this is where it gets really, really wonky, we don't know, again, if these assets will be here or how much the dollar will be worth, etc. But the point is, she can spend a lot more than she wants with this plan. Okay, you can see she's only pulling out, say, for example, in 2030, 44,000. That's indexed at 4.5%, 5% per year, additional living expenses. But you can see the fund is growing very radically. If you go out to 2035, she will have $2.5 million in the kitty and have spent all her living expenses. So if what you need to do here is, if you see you're making a lot more money, then live a lot more, go for that trip to wherever you want to go. It's on the list of things to do, and do as much as you can while you can as well. Now, this is 30% compound annual growth rate, both Tesla and Bitcoin. What happens if we go to 15% compound annual growth rate, which is, again, going back to these price predictions at 15% CAGR, there's nothing. Like literally, Tesla goes to $1,000 in 10 years. It's not very much at all. But even assuming 15% CAGR, she can still have all those living expenses covered. Again, this is super, super, super sandbagged. And the closing balance, imagine she goes till 2051 and then stops spending. There'll be nearly $1 million in the kitty in 26 years. Okay, even at a 15% CAGR. So we are going to webify this model so you can all play with it and run your own simulations for your loved ones as we go down the line. Now, I do want to talk about CAGRs because this is so important. Camera gone. This is from Søren Basher, friend of the channel. And this is Bitcoin's annualized return, which will trend towards 21% again in the year 2046. But Michael Saylor believes CAGRs will be 30% plus forever. Søren Basher believes we'll be 50%, then reducing to 33% by 2030, and then to 25% by 2035. The new model will have variable diminishing CAGRs over time too that you'll be able to configure yourself. But the point is, what I showed you was heavily sandbagged. Only 30% CAGR. It's going to be a lot more than that. A lot more. Just listen to people like Ron Barron, $25 trillion projection. That's a 25x for Tesla in the next 5 to 10 years. Again, crazy. So just, again, nobody can predict the future. But if it does what many experts think it'll do, it'll be insane. All right. So good luck to you, Dan, and good luck to your mom. Next question is from Aish. Hey, James, I've read about the blockchain trilemma. And as I understand it, Sol have gone with security and scalability, sacrificing decentralization. My questions are, is the blockchain trilemma a real issue? Or B, in your opinion, is Sol too centralized and that could be why the price isn't higher? Are big institutions afraid of investing heavily into it despite it being technically the best L1? Good question. And I like the way you framed it because I haven't done a trilemma question now in years as far as I can recall. And we got some data sets to support this. But one of the weird things is TARDFi, as I refer to it, they don't look at the data. They don't understand decentralization. And if they did, they actually would prefer centralization because they like control. Just look at Base. It's one sequencer, one node, one validator, etc. Many of these chains are extremely decentralized. But let's look at some data. First of all, you're right. Sort of right. Scalability licked by Solana, and it's only getting faster. Security as well, rock solid. And decentralization, let's look at some data regarding it. This is the blockchain trilemma. A lot of people believe in order to be a perfect chain, you need to balance all of these three or nail all of these three. And that's what Bitcoin does very well too. Now, this is, I'm going to turn off my camera again. This is the best measure of decentralization. It's called the Nakamoto coefficient. It's how many validators, etc., nodes need to be controlled to take over the network. To take over Bitcoin, you need to pull in about 9,300 nodes and control them. That would require a huge amount of power and machinery. For Polkadot, which is a dead chain, you need 183 nodes. Cardano is number 3 on the list. 25 is the Nakamoto coefficient. Avalanche, number 4, 24. And Solana's number 5 at 21. Okay. And remember, the more validators, the better, the more decentralized. Sui is 19, Aptos 18, etc. But if you go down the list, okay, you go down the list, Tron 1, Base 2, Flow, all these things are ICP, Ethereum 2. I mean, Ethereum is as centralized as Base, just to give you an idea. But TARDFi does not care. They like centralization. So the point is, you think Solana is not decentralized? It's the 5th most decentralized chain, right? Now, the ones above it, we have to talk about those for a second, because if a chain is decentralized, going back to the trilemma, decentralized, it doesn't mean it's good, because you got to balance this with other factors. Let's look at Metcalfe's law. This should theoretically determine the value of a blockchain, i.e., how big the network is, how many users it has. And unfortunately, the slide is cut off. But anyway, damn, I don't know how I got cut off. Let me see if I can make it bigger, smaller. No, darn. Anyway, the point is, daily active users, Solana has 4.1 million. The number 2 chain is 2.5 million from Tron. And then Binance, 2.1. Binance is also very heavily centralized, like Tron, like Base. Sui and Say are getting better. In fact, Sui, per this, has more daily active addresses, but I think Say does more transactions. Anyway, that's not important. But here, the point is, you can have Cardano with a Nakamoto coefficient of 25. But does that really matter? The answer is not if they don't have users, okay? This is the important part. So Solana does 3,800 times that of Cardano, yet people still believe in Cardano. Yeah, it's decentralized. Another little factor piece here is transactions by chain, not just users, but the amount of use it gets. Solana is at 3.5 billion in July. Transactions, compare that to 928,000 for Cardano. So the numbers here get pretty wild. Solana now does 77 times more transactions than Ethereum, and it's far more decentralized. Okay, I'll repeat that. 77 times more transactions, yet trades at 1/5 of the market cap. Solana does 3,800 times that of Cardano, yet people still believe in Cardano. Base does all on ETH, but it's a private chain, one central validator, and no accretion of value to the mothership. Even Say here does nearly 4 times that of ETH. So that is the other important factor. And it makes no sense that things are valued. We'll talk more about valuations and price predictions in a second in the next segment. But the point is, when it comes to the trilemma, Solana is extremely well set. It's firing on all cylinders, okay? So it has the crazy scalability, it's got the security, and it's got the decentralization. At least it's the 5th most decentralized chain. You know, it'd be nice to see maybe 30, the Nakamoto score, but 21 is plenty sufficient, okay? So I hope that helps, and thank you for the question. Next one is from Seb W. Where do you see Solana going to from here, 2025 and 2026? It makes up 4% of my total portfolio. Am I overexposed? Thanks. P.S. Do you see an economic downturn in 2026? So I'll catch the first one first. No, you're not overexposed at 4% at all. Don't worry about that. But let's look at a couple of things as to where I believe the price could go. So the crudest and best model that I use, simplest things are always the best, is dominance. So if you look at Solana dominance right now, yeah, it's doing crap. Solana dominance is at, let me calculate it real time. Well, the price is at $162.55, but solid dominance is only 2.38% of the entire crypto market cap. The all-time high is at 4%, and it's come way off the all-time high. So it has not been doing very, very well. When you compare this to other assets like Ethereum, where Solana does 77 times more transactions than Ethereum does, and ETH dominance is now 12%. That's nearly 5x higher than Solana. So something is really, really broken with fundamental valuations here. But again, crypto never worked out. I was hoping in 2025 people would start doing proper fundamental valuations, but they didn't. Anyway, the cream eventually floats to the top. But the point is, we can use this to calculate price as to where we're going to go. And the good thing I like about this model is you can create your own price target. This is what I call my Sol Dom model. It looks at the total crypto market cap. Right now, we're just shy of $4 trillion. If Solana dominance goes back to 4% with a $4 trillion crypto market cap, currently it's like 3.7. If it goes back to 4 trillion or hits 4 trillion, which I think it did already, and we go back to the dominance of 4%, that will take the price to $357 a Solana token. If we go to 5 trillion and dominance goes to 4%, we go to $446 a token. If we stay at 3% and we go to 5 trillion, it takes to 334. So there's a number of ways to skin the cat here. You can take this, screenshot it, and calculate your own projection of crypto market cap, how high we will go and when we will get there. But that is the simplest and best way. We could do charts and everything else and use the Lila model to estimate price. But I think this is the simplest, most conservative way. Now, if people think things would actually really kick off and we go to 8 trillion or 10 trillion market cap, imagine 10 trillion crypto market cap. I have here a projection for 2032. And we go to 4% dominance, that would take the price to $900 a token. But these are all ifs, depending on each other. Let's see where it goes. Anyway, I'll be here for the ride. And your final question. And I was trying to make up a simple chart to explain, will there be a downturn? There is always an economic downturn or recession happening, always perpetually unfolding, always either across the globe or in an industry at any given moment, everybody. When people talk, oh, there's a recession, there's always a recession. Oh, there's an economic boom. There's always one somewhere. And right now, I do believe that AI will continue to grow even more powerful throughout 2026. So that area is going to grow, but it's also going to make unrelated sectors suffer as we go forward because there will be severe disruption and severe decline. The world is changing every 6 months now. When I started in markets in 1990, it took the world about 10 years to change. Now it's changing 20x faster every 6 months. So there's always a recession. There'll always be a downturn. But I think if you are AI or AI adjacent or crypto adjacent, you could be just fine. Although we might get a bear in 2026, but a lot of people are saying, no, that may not happen either. So either way, we'll be here for it. Thank you for the great question. Next question is from Kantojo. As always, thank you. You've mentioned in the past you got into real estate early in your investing journey, and I believe you are an alpha maxi. I am. I'm curious about your thoughts on opendoor. Eric Jackson was recently on Pomp's channel talking about a pretty hefty move up in the next couple of years with trade deals in and one day in the near future, a rate cut. Would these not cause the stock to go up, not to $82? Is there alpha there? Let's have a look. First of all, this company is called OpenDoor. They have a business where I think they help people kind of flip properties, basically a property flipping business model. I think they call it iBuying model, to buy, renovate, and resell, the old flipping game, which used to be very effective in 2017, 2018. It used to be very effective before the global financial crisis. But ever since C19 happened, it's been a little bit harder. But the financials are nightmarish. You can see here, everything is scary. A lot of people believe results are manipulated. Revenue per share is going down, which means there's probably dilution. Revenue per share has been in decline for the last 5 years. And there's a high probability of bankruptcy in the next 2 years. Ugly, 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 ugly. We'll see where all this goes. Brutal financials, a lot of debt, and the cash is dwindling fast. And revenue, I drew a little red line on the revenue that's blue on the left. It's just going down. It did peak up a little bit mid-2024, but then it's tanked ever since. And of course, high interest rates, thanks Jerome Powell, are destroying this actual business segment in a big way. But there's more, okay? So flipping real estate is good when you have a lot of buyers. And the people that typically buy these flipped properties tend to be younger generations. And just sharing this little chart here, which is a tragic chart. It shows you that, yes, millennials age 29 to 44 and Gen Z age 18 to 28 are facing the worst barriers to home ownership in the history of the world. Actually, I saw a recent ad there. There was a tiny little hovel of a place in Sydney, Australia for $2 million. And you can buy a villa in France or Italy for that money. It's bonkers. Anyhow, even a luxury condo in New York City, but everybody's leaving New York anyway. But anyway, moving on. I'm digressing here. But you can see this indirectly pressures the flipping market by shrinking the pool of first-time buyers who often target these affordable, renovated, flipped starter homes. So this is not good. The question is, the macro question I have is this because of interest rates, or is this because younger generations are smashed? I think, hopefully, well, everybody who's not watching my channel, yeah, they're smashed. But if you're watching this channel, you're probably not smashed. You're probably well dialed in and prepared for the future. But that is very sad. And this chart basically is the number of 30-year-olds who are both married and homeowners between 1950 and 2025 has fallen from 55% down to 12%. It is catastrophic. If I was Jerome Powell and I was looking at this chart, I'd be very sad and alarmed. Hey, Piper, good to see you, buddy. Now, let's look at the chart. The ticker is OPEN. It is, when we created the ATR model, we created a concept called the zombie coefficient. The original genesis of this model was to determine dead names. And this one is well and truly dead. A lot of people are like, oh, well, it was at 50. Maybe you can go back to 50 from $1. That's a 50x. That's not the type of frame of mind you should have unless things really turn around, and the macro right now is ugly. By the way, a lot of the important part about flipping properties is to renovate. Yesterday, I spent $3,500 on bloody copper pipes. You'd swear they were made of gold. They were so expensive. Copper is through the roof here in California. Absolutely bonkers. Anyway, TLDR, it's risky. It's a meme stock. The flip model, I don't know if it's going to come back. In a perfect world, by the way, why can't AI do a lot of the paperwork and find a way to automate the processes around buying and selling properties, finding properties, renovating them, selling them without an intermediary? Because they take their piece too. So I don't know. I think AI will disrupt everything, and it could also disrupt this. But again, I'm going off on another tangent. But this is a GameStop type company. It's a dead zombie. They have a lot of debt. They've got no cash. They probably have to dilute some more to raise more cash. I don't see the market coming back. Even if the Fed cuts 25 basis points, that's not going to spark this company up at all. Yeah. So that's my take on it. Would I touch it? No. Is it going to 100x? No. Is it going to 50x? No. That's my answer. Happy to be wrong, but it's not worth the risk for me. Dream with eyes open. Hi, James. I joined the IA community 1 year ago and I've been following you for 2 years. Woohoo. I want to ask about the possibility of new players like DFDV and UPXI to become the MicroStrategy of Solana in the future. I've missed the MicroStrategy boat. I have SL positions on DFDV and UPXI, currently losing on both. I have heavy concentration on these as I didn't want to miss Sol treasuries because I missed the MicroStrategy treasury. Do you think they can be the MicroStrategy of Solana in the future? I think it's more possible because DFDV also generates staking yield on Solana holdings, whereas MicroStrategy does not. Also, any price predictions you have for DFDV and UPXI for 2026? All right, I'm going to share some pretty blunt news. First of all, the numbers. I did a detailed video actually a couple of days ago, which nobody actually saw because nobody's interested in math, but it was basically an analysis of all the proxies, Bitcoin proxies, ETH proxies, Sol proxies, detailed financial analysis, but nobody cares. Anyway, it's not worth the math to do it. I'll just continue to share these models on Patreon. But the point is, you mentioned two names, UPXI and DFDV. UPXI now trades at a 25% discount to its Solana bag. They have over 1.9 million Sol. And the DFDV is number 6 on this list, trading at a NAV premium of 1.43. So 43% premium to the bag. So it's not too bad. It's actually MicroStrategy and DFDV are almost at the same level, and MicroStrategy is historically low. They're normally range between 2 and 1.5. So we're not sure where this is going to go, but the earnings call was bonkers, and I've got some theories on that. I wrote about it actually this morning on Patreon. But anyway, separate issue. These things are beaten down. Now, back to your question. All proxies are very, very high risk, okay? I'm going to zoom out for this because this is too important. Proxies are wonderful when you can get in the bear market. But when the Sol proxies came out, we saw Sol go from say $8 to 160. Okay, that's a 20x. And then you think you're going to get another MicroStrategy that was buying Bitcoin at like 10 grand. No, there's only ever going to be one MicroStrategy. It's very, very important to realize that. And remember, pure form always for the majority of your holdings. Proxies are like side bets. I always stress 80% hodl bag in pure form, 20% trading bag. You can play your little leaps and your little trades and your covered calls and your trading bag, etc. And you only buy proxies when the NAV premium is low or negative. All right, not when it's high. And nobody understands these proxies. And we are being proxied to death as well right now. There's simply too many of them and nobody analyzes them. Nobody understands them. In fact, let me go back for a second because there's one that's super hot, and that is BMNR. Like it's trading at 1.82, 82% premium over its ETH bag. And the other one is SBET, 1.51. Again, 51% premium over its ETH bag. So that's how the ETH ones compare. But we have too many proxies all over the place. And back to answer your big question, will this be the MicroStrategy version of a Solana proxy? The answer is no. There will only ever be one MicroStrategy, one infinite money glitch player, one guy who got in early and got in hard with extreme courage. That's it. And they got in not just at the bottom of the bear, but before the previous bull run too. They've been doing this for 5 years. All right. That's the difference, ladies and gentlemen. Okay. Remember that very carefully. Be very careful with proxies. They are super high risk. Nobody understands them. Nobody values them, knows how to value them. So be careful out there. Next question from user 28. I like that name, by the way. It's safe and secure. You'd never want to give away your identity. Like if you're Dan 1234, that's fine. User 28, it's great. But you never want to give your first and last name because, you know, no, it's weirdos out there. Anyway, hey, James, any news on when you will be doing an AI-based MAG 7 or 9? I think you mentioned this a few weeks ago. Woohoo! Yes, there is. So I've chosen the 9. That's done. But the hardest, well, first of all, finding the 9 is very hard. But then predicting the price of these 9 through 2030 is a whole different animal, whole different beast. And predicting that far out is very hard. That's what's taking the most time as well. But that'll be coming soon. rest assured. Next question from Valuable. Given XAI's integration of Grok into Tesla vehicles, how might a finding of copyright violation against XAI, similar to recent lawsuits against AI startups like Anthropic, impact Tesla shareholders in terms of stock value, legal battles, and strategic implications for Tesla's AI-driven features like full self-driving and car services? Could Tesla face direct legal or financial consequences if XAI is found guilty, considering their close partnership and Elon Musk's leadership in both companies? How might a copyright violation ruling affect investor confidence in Tesla's broad AI strategy, especially for shareholders betting on autonomous vehicles and robotaxi growth? Very good question. I like the way you think. You're looking around the corner for potential risk that could impact the stock price. So I love the way you're thinking. First of all, for those who aren't familiar, this is the Anthropic case. And we don't know what's going to happen to this. Anthropic apparently are still raising money out there. But from Garrison Lovely, Anthropic could be bankrupted within the next few months, thanks to last week's barely covered legal ruling, which exposes the AI startup to billions to hundreds of billions of damages for its use of pirated, copyrighted, protected works. Okay, this could lead to massive fines. It could destroy Anthropic. It could also impact the whole AI industry. But it's a very tricky gray area, and oftentimes judges make stupid decisions, which can be reversed. Okay, when there's material out on the internet, the question is, how protected is it? Now, let's get into your question, because XAI, most of the data from XAI is actually synthetic data, so it doesn't belong to anybody, or it's homegrown data from the X Twitter platform. And X is privately owned, and so is XAI. So legal trouble, like shareholder retaliations, etc., activist boards, can't affect those companies. And Tesla said Grok conversations in a car are completely private, so you can say anything, you can listen to anything. It goes into your ears, nowhere else. There's no record of it. So from that perspective, I think they're kind of safe. Also, there's if XAI gets into trouble for how a trainer uses Grok, Tesla would not be held responsible, because there is a special situation. It's the Section 230 in the US, which protects it from being blamed for things like users' posts or Grok AI's replies to those posts. And Tesla doesn't have that type of protection for its full self-driving system if it misbehaves. Now, there could come a time in the future where AI could be so powerful, there could be a little chip that would connect your phone, which mine is plugged in, your phone to your, maybe through Bluetooth, some other adapter or connector in your car. Maybe the AI could drive your car in the future, but that's a long way off. But it's possible as well. And Grok isn't just an optional tool, okay? Like full self-driving, it's just a feature that people can use. So I would not worry about this at all. It will not hurt, or there is no risk or exposure to Tesla's business at all. So I wouldn't be worried. Next question is from 2B. Hi, James and the InvestAnswers team. First of all, thank you for everything you do. Your content is incredibly valuable, especially for those of us just starting out. I'm new to Patreon and very new to trading, and your trading one-on-one videos have been amazing. Thank you. That said, I'd love to ask, would you or Jacob, who's on the team, consider hosting a live crash course or short interactive series on trading for beginners, something structured but hands-on to help bridge the overwhelming first step into confident execution? I know many of us would benefit hugely from that kind of format. Really appreciate your time and wisdom you share. Thanks again for helping demystify the world of finance and investing. And first of all, kudos to you. It's very, very important to know your limitations and be nervous, because if you run into the markets thinking, oh, I got this, I'm going to make millions, you get your face ripped off. So being humble is so important, and wanting to learn is so important. So I really hats off to you for that. Now, good news. Woohoo. We are on it. So this is something that we are actually doing in the very near future. We are starting this in September with Jacob and myself. So stay tuned on Patreon for that, exactly when it comes. but we will be doing it just internally within Patreon as well. So thank you for that question. And favorite part of the week, this week, we donate to the Wild Spirit Wolf Sanctuary. The team loves wolves to support Dorian, who is a mid-content wolf dog. And we love dogs. Dorian is 76.2% gray wolf and 23.8% Siberian husky. By the way, I just learned recently you can do DNA tests on your dogs, and they tell you exactly what they're made up of. So that's how it's so specific here. And this Dorian Gray, get it, gray wolf, and other wolves on the sanctuary are very well taken care of. And tomorrow morning, DCA as usual with the gang, CTO, Mando, and of course, Marty Party. Marty Party and I will be talking about Binance manipulation of the Sol price. Ta-da! Craziness, crazy times out there. Remember, the way to do well when markets are manipulated is understand first and foremost that they are manipulated, and then play into the manipulation as well. That's key. Hope that helps. What I mean is, when you see them manipulating the price, like flushing the price down, be ready to strike a buy when they have flushed before they can get in themselves. Hope that helps. Hope everybody got smarter today. Let's do some live questions from the team, and a big thank you to everybody for being here, and the mods in the chat, and the team behind the curtain as well. Let's get into it. First of all, Doc Intern, as usual, with the 4-year cycle pretty much dead. Woohoo! I hope you're right, Doc. And 40 to 50% CAGR reasonable for Bitcoin. Is it okay to maintain a 50% loan to value on a Bitcoin backed loan while borrowing against it every year as Bitcoin appreciates? Thank you for all you do. Doc Intern, you know my rules. If you are borrowing against Bitcoin, never, ever more than 25% loan to value. The only time I would break this rule is if you're at the bottom of a bear market. Then you can go 50% and make sure you can cover the obligations and bail it out if the bear gets worse. But to be safe, 25%, maybe 30%, but do not do 50% at all. And what you can do as well, though, let's go back to that one slide. Let's look at the CAGRs again, because the miracle of CAGRs, everybody, compound annual growth rate, get familiar. I think it was slide 11 or 12. Hold on. This is very, very important for Doc Intern. And I know he knows this when I'm cold. These are the CAGRs, okay? So the question is, if we're getting 50% to 33% CAGRs for the next 5 years, things will be off the hook. Yes, there will be drawdowns. Yes, there'll be 30% drawdowns, maybe 40% drawdowns, maybe 50%. But if you can time them correctly, you're fine. But you never know what could happen. And I'd hate for people to get liquidated. That's why I always say 25%, because the other part of that too is you never want to borrow to speculate. That's always dangerous as well. So thank you for the question, Doc Intern. And yeah, CAGR, the miracle of CAGR. If you're paying 6% interest on a loan to buy Bitcoin that's going up by 30 to 50%, it's a no-brainer. Absolutely. Marie Mulda, thoughts on using Fidelity type service for custody versus using Bitcoin ETFs? Worry for scams, hacks, looking for wisdom from the sage. You must have missed my video last week or the week before, because I said I actually did that. I transferred Bitcoin to Fidelity because I don't trust myself with self-custody at all. So yeah, and I do trust Fidelity. They've been around a long time, and they're they've been in Bitcoin since 2014, if I'm not mistaken. So yeah, definitely. I prefer Fidelity holding my Bitcoin because I've got other Fidelity accounts too. I don't think they're ever going to tarnish their reputation. It's too valuable. Than maybe the Bitcoin ETFs. And I definitely trust them more than my own security as well. There's too many scams out there. I get scam text messages and phone calls. It used to be like once a week. Now I get 5 a day. Okay. Oh, and the big one is the Google. This is Google Help Desk. We think your account has been hijacked. Please click on this link so we can hijack your computer and drain all your accounts. Getting those all the time. Coinbase all the time. Kraken is the new one too. So anyway, bunkers out there. From Joe Biden's daycare. Hey, buddy. For those that don't have a full Bitcoin yet, how would you suggest getting to that? as it is becoming more difficult to achieve pair trading, etc. And if you can pair trade tax-free, pair trade between MicroStrategy and IBIT using the ARB cloud, that's how you get there. Tax-free, fast. You can make 8 to 10% a week if you're good, and just keep growing your bag that way. And remember, although it's nice to have one whole coin, having a proxy version of whole coin, there's nothing wrong with that too. Whatever the number of shares, I think it's 3,700 IBIT shares or something. That's also fine. And thank you for your super sticker, Adam Q, Hudson the Dog, CryptoLast Outpost. Thank you, Data Dash, Piper, Placebo Gazebo, Batman, TD Tesla, Sean Donnelly, and K8. Appreciate you all. Piper gets lux. They're even getting scam calls up in Canada. I wonder if they're calling long distance to scam you. Madness. Remember, the simple way to test is first, well, these companies will never call you. Try as a test. Try call Kraken support or Coinbase support or Google support. Try get a human on the end of the line. It's impossible. So why would they ever call you when you can't even reach them yourself? Anyway, thank you all. Have a good night. See you tomorrow.